Today, Bitcoin and Ether fall after the Fed pushes back on the idea that interest rate cuts are coming quickly. Celsius exits bankruptcy and begins paying more than $3 billion to creditors. And Cory Klippsten of Bitcoin-focused exchange Swan discusses the company's decision to launch its own mining business. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Cryptocurrencies in the red again this morning after the Fed announced yesterday that it plans to keep rates steady and pushed back against Wall Street's expectations that it would start cutting rates as soon as March. By noon Eastern, Bitcoin fell less than 2% to the $42,000 level. Ether dipped below $2,300, and Cardano fell nearly 4%. Okay, let's talk about the top stories. Crypto lender Celsius has successfully emerged from bankruptcy. In a press release on Wednesday, the company said it had started distributing more than $3 billion in liquid crypto and fiat currencies to creditors. It's also created a new Bitcoin mining company called Ionic Digital, which will be owned by Celsius creditors. The company also said it expects Ionic to become a publicly traded company. Now, Celsius was one of the crypto businesses to go under following the collapse of Three Arrows Capital in May of 2022. Its founder and former CEO, Alex Mashinsky, still faces several federal charges, including securities fraud and wire fraud. Next, nearly 4 months after the October 7th Hamas attack on Israel, Binance and its founder, Changpeng Zhao, have been sued by hostages and victims' families. The lawsuit is over the crypto exchange's alleged role in processing transactions tied to the group, which has been designated a terrorist organization by the U.S. government. Some of the plaintiffs include 2 U.S. hostages released by Hamas in late October, as well as the family members of a 20-year-old New Jersey native who was serving in the Israeli army and was killed on base when it was attacked in early October. The complaint, which was filed yesterday in the Southern District of New York, accuses Binance of facilitating the financing of Hamas and providing a clandestine financing tool that the exchange deliberately hid from U.S. regulators. A few days after the October 7th attack, the Wall Street Journal, citing a review of Israeli government seizure orders and blockchain data, reported that Hamas militants behind that ambush raised millions in crypto. We reached out to Binance but didn't hear back right away. Finally, crypto miners in the U.S. are about to start reporting their electricity usage to the Department of Energy. The U.S. Energy Information Administration put out a press release on Wednesday announcing a provisional survey on electricity consumption by crypto mining companies. The survey is expected to start next week, and the agency's administrator says the EIA intends to focus on how the energy demand for cryptocurrency mining is evolving, identify geographic areas of high growth, and quantify the sources of electricity used to meet cryptocurrency mining demand. Crypto miners have faced growing scrutiny in recent years over their energy use, tax breaks, and electricity buybacks during times of high demand. We reached out to the Blockchain Association about the survey, but they declined to comment. All right, let's stick with Bitcoin mining for our main story. Last week, Bitcoin-focused exchange Swan unveiled its new mining unit. The company announced that it had quietly begun operations back in September of last year and had mined over 750 Bitcoin at the time of the announcement. For our main story, Crypto World's Tanea McKeel caught up with Cory Klippsten, the CEO of Swan Bitcoin, so he could walk her through the company's decision to break into mining.
I want to get right into it talking about mining, which is kind of a hot topic over here ahead of the halving. So your mining business recently came out of stealth mode. Tell me a little bit about that and particularly about the timing. Why are you doing this right now?
Yeah, great to see you tonight. Thanks for having me on again. And yeah, it is at the tip of everyone's tongues. And you just gave me a great visual of you guys over at CNBC at the water cooler, just kind of like hanging out, talking about hash rate. I hope that's true and actually happens. That makes me smile. Yeah. So this was interestingly organic that we got into the mining space. It sprung out of the launch and the growth of Swan Institutional, which was over a year ago that we started that unit. We actually didn't announce it until December, and there was kind of a lot going on and new products that we wanted to sell to the market. But having people with the Wall Street background, the hedge fund background that know how to structure deals, starting to develop great relationships with lawyers, with all the bankers on Wall Street that cover the space, talking to all the analysts. And then this started to kind of spiral into more and more activity and more connections as we added a mining industry day to Pacific Bitcoin and started to talk to all the miners about sponsoring and coming and attending. And we had all the CEOs out in Los Angeles this fall. And essentially, we spotted an opportunity to get into the market when a lot of the public and large private miners were sort of encumbered, whether by large debt or by having purchased lots of ASICs at higher prices. And so there was just a lot of inventory available that could be snapped up relatively cheaply. And there was a lot of opportunity to work with really good operators that had excess capacity and really low priced PPAs. And this was true both in the USA and internationally. And so we just started banging phones and seeing who was out there that could fund some of the opportunities that we saw. And we saw that we were pretty much the only people calling on anyone as well. Being able to come in and have our brand trust, and then being willing to do the work, I think was a big part of this. And then, so it was kind of the financing effort and opportunity and cap raise that opened up opportunities to partner with folks and to be able to put rigs that we were purchasing in next to theirs. So that's kind of the phase one for Swan Mining. And then, of course, we are in the process of building our own infrastructure at a few different sites and partnering with folks on new build outs, but those are much more long dated. So this, we're at about 4.8, 4.9 today of exahash that's actually live and hashing, and that will go to about 8.4 with rigs that we've already purchased, and those should all be plugged in by March. But pretty much after that, we'll be looking at plugging into sites that we actually control the infrastructure.
How are you thinking about competition in the months ahead when this halving event takes place? The miner revenue does get cut in half. For some miners, it's not their only revenue, but that would cause some miners out there to have to come offline. And for some miners to go a little bit further than that, it might be a complete failure. There could be M&A on the horizon. So it is a really interesting time for you to get into this business. And, post the ETF approvals and launch, I think a lot of people, while some were anticipating that Sell the News event, others were really hoping for a rally to see the price go to 55K because that could have helped a lot of the miners. So it did not get to 55K, obviously, but, what does this mean for Swan and for competition, and how are you avoiding that fate?
Yeah, so two things. One, we're feeling very acquisitive of potentially companies, certainly sites, talent. So if anybody is under the gun and it looks like they're not going to make it, and this would probably be maybe the smaller players, then we would be looking to help in that way. And then for the larger players that probably are going to make it, but maybe getting buffeted around by the bad news or fear of the halving or having some debt overhang or something like that, then we want to be partnering with them on the Swan institutional side and helping to unlock value by finding financing and creative structures. And so that's pretty much the way that we're approaching it. Kind of help the larger guys and, help the smaller guys maybe by acquiring some part or entire businesses in some cases.
Where are your sites located and how many do you have?
Yeah, so are we public with this? I think we're public that we have 7 sites today. So hopefully we are already public with that anyway. We are now. And that'll be going to 10 by March. Our long-term goal is to be about evenly distributed 50-50 on hash rate, US versus international. We're a little bit more weighted in the US today, and a lot of the stuff that we have coming on later this year is outside the USA.
What are some of the biggest challenges that you're thinking about for 2024?
I feels like a lot of tailwinds, to be honest. I think the ETFs have completely changed the conversation. I've been talking a lot about this publicly and tweeting about it and posting about it, but the last 6 years, 2017 to 23, the top of funnel for Bitcoin was altcoins that tell misleading statements, if not outright fraudulent lies about Bitcoin to try to sell their shiny altcoin. And that top of funnel got completely replaced a couple of weeks ago. And the new top of funnel is the Bitcoin ETFs. And, that is a packaged up Bitcoin, and it's a paper Bitcoin, and it charges fees every year instead of once, et cetera, et cetera. But they're talking about Bitcoin, and they're selling Bitcoin generally using a pretty accurate narrative about Bitcoin as a store of value. And, maybe they're not capturing the other 80% of what Bitcoin is, but that's where you would start if you were just trying to sell the real thing. So, I welcome our frenemies and their ad budgets, and we're obviously collaborating with these folks on some media and events and things like that. And, I think it was always inevitable that institutions would get involved in Bitcoin in a massive way. And it was just a matter of when. And I'm glad it's here, and it's been great for all Bitcoin businesses to benefit from the increased promotion of Bitcoin every single day on every single channel. And there is this big, what I've been calling the ETF multiplier effect, where I actually think that because of the ETFs existing and that stamp of approval from the big financial firms, there's actually, if you think about the amount of money that will actually flow in just into the ETFs, another 5 to 10x of that will flow into Bitcoin through other channels because of the existence of the ETFs, because it's no longer scary to anyone to be involved in this space.
Okay, that's all for Crypto World today, but we will be back again tomorrow, and we'll see you then.